Alrighty, guys, take a look at that. It looks like the markets are starting to give. It's currently about 12:20 p.m. on the East Coast when I'm filming this video. Triple Q is down almost 2%. We have SPY down about 1.2%. Russell's down 0.7%. Dow's down about 0.6%. And what we're noticing here is on Triple Q, we have broken under a key level. Well, actually, two key levels. The first one was at 300. The second one was 295. Now we're under that. And it looks like the Bulls have one more chance here on Triple Q. And obviously, we know this week it's going to be a wild week. It's already been a wild week. You know, we have earnings. We have today Google, I believe Microsoft's today, Amazon, Apple later this week. We have the Fed meeting, which started today. Tomorrow's the press conference. We're most likely going to get a 75 basis point rate hike, the GDP number. Shall I go on, guys? I mean, this week is going to be crazy. So we're already breaking down to the downside, which is not a good sign. And what could revive this is maybe if big tech earnings look better than expected, maybe if the Fed stance is more dovish than you know how it goes, right? The sentiment in the markets, right? So we have to see what happens between 288 and 294-ish, this little $5-6 window that we're currently in. If we get buying pressure right around 288, 290 on Triple Q, maybe we do have another run from there. But the second, and I've said this before, I'll say it again, the second Triple Q breaks under 288, it's probably going to get bloody from there. We might be going down the next gap to the downside's 278, followed by 275, followed by about 269, 270. And SPY here on the flip side looks a little bit better, but it's pretty much on its last, I don't want to say it's the last chance for the Bulls. We do have a couple more chances here, but it's starting to fall under 392, 390. You guys can see currently it is slightly under that double top from the end of June. The first top was the end of June. Second one was beginning of July. We're slowly getting under 392. Now we're at $390, and we're right above the 50 SMA, which is good for the Bulls. You guys can see that here on the 4-hour chart. But if that point breaks, I'm telling you guys, we might be going down from there. And like I say on the channel all the time, I'm not bias in one direction, Bulls, Bears. I'm just giving it to you guys how I'm seeing it in real time. And these videos that I make on YouTube, at the end of the day, that's what they kind of are. They're real-time snapshots of what's going on in the markets. That's why a lot of people are like, Stas, you're flip-flopping on the thumbnails. It's because these charts, the markets that we're in right now, they're extremely volatile. One day we're ripping, we're breaking out of moving averages, we're taking out highs, we're at multi-week highs, and then a day or two later we might be reversing back to the downside aggressively, where now we're blowing through support levels, and that's kind of where we are right now. I mean, we're starting to break through support levels, and if this breaks 390, now we're fighting back over 391, which is good for the Bulls. But if SPY breaks 390, 388, lower 380s, it could get ugly from there. And I'm just keeping it real, guys. I'm keeping it real. And if you guys do like the content and you like my perspective, let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. Do all that good stuff. It helps out the channel and the algorithm. And by the way, if you want some free stocks from Moomoo, you can get 10 stocks from Moomoo. Each of those valued up to $2,500. Just use my link down below. Deposit at least $100. And you could also get 6 stocks from Webull with any amount deposited. Guess what? Also linked down below. So with that being said, guys, and by the way, if you use any of those links, that helps out the channel. I appreciate you all as always. With that being said, let's talk about what's going on here with Walmart, which you guys probably know. I actually made a short about it. I filmed that last night, posted on TikTok, also here on YouTube Shorts. So if you guys caught that, and I'm sure you already know what's going on, but Walmart, they just lowered last night. We got the news after the market, conveniently. They just lowered their full-year profit outlook due to inventory and inflation. Consumers, and you guys know this, I mean, this is not anything new or mind-blowing or groundbreaking, shall I say, but consumers are spending more on necessities because of inflation, right? Inflation is causing goods to go up in value, and people don't have the dollars to throw at everything now, so they have to focus more on necessities, and thus they're spending less on non-necessities, right? Which is forcing Walmart to lower their prices on these non-necessities, clothing, other products, right? And this is affecting the bottom line of Walmart, right? Their margins are getting hit for sure right now. And you guys can see, I didn't even pull up Walmart stock. Let's pull it up. Walmart is currently at, what is it, $120 a share, down about 8% on the day, down $10 on the day. So this thing is getting destroyed today. We're talking billions of dollars wiped off of the market cap. And I checked this morning. Somebody in my Patreon was, we were talking about it on the DM on there, about Walmart. And I told them, honestly, I think Walmart is still a bit frothy at these levels. I wouldn't be super pumped to buy Walmart at these levels. And I just pretty much base that off of simply the PE alone. If I pull up the PE of Walmart, price to earnings ratio, trailing 12 months, it's right around a 26. I mean, that is not that, it's not like I'm salivating at that price to earnings ratio, right, guys? It's not like Meta where I'm looking at that and I'm like, oh man, that I need to get a piece of, which I've been buying Meta. You guys know that. I've been buying Meta. Walmart's not there yet. Walmart, 26 PE. I need to see that under 20. The teens, 16, 18. If it gets there, all right, I'm going to be looking at Walmart as more of a value play. And it's a strong business. Great economic moat. They're not going anywhere anytime soon. And I'd love to own it. But you got to ask yourself, is the price worth the value? Here, I don't think it is. You always have to get a good price, guys. Very, very important. And their dividend yield is a 1.7%. Not too bad. If that got to about a 2.5%, all right. Now we're talking. Maybe I'll start buying Walmart. But for now, I'm just watching it, and it caused a lot of stocks to fall. We saw Amazon take a hit, and it's probably still down a lot. Yeah, Amazon's down over 4%. It looks like it's trying to fight to hold the bottom of this wedge here, but we're not really finding confirmation of a breakout quite yet. Again, we're down on the day. So give it a couple of days, guys. Amazon reports earnings on the 28th, and 2 days from now, Thursday after the bell. If they end up doing well, I mean, this could bounce, and that's why I have my alert set at $118.50. Let me quickly get some coffee, guys. You know how that goes. We're not editing this video, but we're gonna take a little break here. Which, if I was editing, I mean, I probably still wouldn't edit it out. Alrighty, so yeah, keep your eyes on Amazon. I'm sure Macy's, of course. Macy's is probably getting destroyed right now. 6%. JWN, destroyed. Yeah, destroyed. Costco, 3.6% in the red. Target, 4.6%. So these stocks are getting hit. No doubt about it. These stocks are getting hit. But on the flip side, guys, McDonald's is not getting hit. Good old McDonald's. MCD's the ticker. They reported earnings this morning, and the stock is up almost 3% on the day in the midst of a day where all of the indexes here in the U.S., they're red. We have the VIX up over 7%. Voice crack. You guys caught that. Again, not editing this video. So McDonald's ended up, let's see here. Where the heck did it go? They ended up doing, come on, where are you? There it is. Q2 EPS, $2.55 versus $2.47 estimated. Revenue, $5.72 billion versus $5.82 billion. So they missed on revenue ever so slightly, but they did beat nicely on EPS, which I guess the markets are forgiving them for missing slightly, ever so slightly there on sales. Let's see here. McDonald's reported Q2 global comparable sales increase of almost 10%, 9.7% to be exact. And that's what you want to look at, comparable sales when it comes to restaurants, retail. I talk about that all the time. So comparable sales, great for McDonald's there. And let's see here. Do we have anything on guidance? It looks like U.S. same-store sales up 3.5%, actually 3.7%. And again, global was right around 9.7%. So that's good. Not only in the U.S., comparable store sales are up, also globally, with, I'm assuming that's the U.S. included. Maybe not. I have to look deeper into the metrics. But overall, pretty decent, I'd say. I'm not seeing anything on guidance. Maybe they're not giving guidance, but they did pretty well. And I'd say that comparable store sales number is it's a contributing factor to the stock moving up here. And my alert has not been broken yet, guys, though. With this great earnings report, it's all great and all, but we haven't broken 258, which we're right at it. We might test it and break it maybe today, some point later this week, but overall, we're getting close to it, and we are moving in the right direction. Solid earnings report, golden cross, above the moving averages, above the wedge. Now this just has to break 258 and probably 260. If that point does come, guys, this could be breaking out towards $270. And I know it's not the sexiest company, but you got to watch it. You got to watch it. These stocks tend to, well, I don't want to say they tend to outperform or say anything stupid like that, because who knows what's going to happen, but it's a defensive stock. McDonald's is. If you look at the longer-term chart, I don't want to dive into a rabbit hole here, but last I checked, it didn't do that bad in 08. Yeah, it went up in 08. I mean, geez, guys, look at that. In 07, let's say in 2008, you bought McDonald's at $58. Yeah, I mean, it only went down to what? $52 in 2009, March 2009. This stock did very well, extraordinarily well, in the last major recession that we had. So I'm watching McDonald's, and that's not to mention they had dividends. I think they did have, they definitely had it's a dividend king, right? They definitely had a dividend back then. They were still paying that dividend, guys. If you reinvest the dividends, you might have been positive throughout the Great Recession with McDonald's. Don't take that as a fact. I'm just talking, guys. I mean, I haven't fact-checked that, but you being positive if you reinvested the dividends, but it did very well just based on the glance at the chart during the last financial crisis here. So McDonald's, you got to watch it. Another one quickly, let's run through here, is 3M. Not the sexiest company in the world by any stretch of the imagination, guys, but it's up 6% today. It's up over 6%, chilling at $142 a share. You guys can see that here on the 4-hour chart, and they ended up doing pretty well on earnings. EPS $2.48 versus $2.45 estimated on revenue of $8.7 billion versus $8.58 billion estimated, guys. So double beat for 3M, and they did cut adjusted EPS guidance from $10.75 to $11.25. That's what it was. Now it's $10.30 to about $10.80, but it's still decently above at least the upper end of that range, the 1060 estimate. And they're doing a healthcare spinoff, and I'll be honest, guys, I didn't look too deep into this, but from what I was reading this morning, they're doing a healthcare spinoff which will be completed by the end of, or maybe not by the end of 2023, I guess at some point in 2023, and they said that their healthcare spinoff will produce about $8.7 billion of annual revenue. So, that could be probably a reason why the stock is running today. Had a double beat, although they did cut guidance. The market is forgiving them on that for the cut of adjusted EPS guidance. I think it was a pretty good report. So we're seeing a breakout on 3M. We got to keep an eye on it, guys. And although it is overbought here, we still got to watch it. If this thing pulls back a little bit, it could end up being an entry point. So with that being said, guys, I'm going to wrap the video up. If you enjoyed it, hit that like button. Let me know your thoughts in the comments. Make sure to subscribe. And don't forget to join my Patreon. That's linked down below. Same with your 10 free stocks. If you guys want 10 stocks, each of which could be valued up to $2,500, use that link down below. Deposit at least $100. You could also get 6 stocks from Webull with any amount deposited. Also, guess what? Link down below. And with that being said, cheers, guys. I appreciate you all for watching. As always, I'll catch you in the next video. Peace out.